Okay, what's up, guys? It's your boy LT today. So, today I would like us to have our breakdown. It's been a while. I haven't been doing some breakdowns lately. Man's been busy, so today I want us to look at three pairs. So I want us today we're gonna look at crude oil. We're gonna look at DXY, and we're gonna look at GU to see what is happening. So before we start, get yourself a cup of coffee, cup of tea, anything, and let's go down into business. And of course, smash the subscribe button, like and share. So today we're gonna be analyzing crude oil. As you can see, I already had an analysis, but we are gonna start from the beginning, all over. So on crude oil, I want to first of all start by understanding what the higher time frame is doing. So I want to start from the weekly to understand what has crude oil actually been doing. So based on the fact that I'm a CRT trader and I trade based on CRT, I can see crude oil is in an uptrend. As you can see, the trend is uptrending, but we are trading within a particular range. So I'm gonna mark the range high, the high of the range, and I'm gonna mark the low of the range because we are trading within this range in crude oil. So now, after spotting out this range, what is the next thing I want to understand? I want to see what the previous weeks has been doing. Remember, this is just the range we are playing in, and those are valid key levels. So now, I want to mark maybe key levels based on the weekly time frame. So we have this weekly range here also. So now you want to understand, you have to understand trading ranges. You need to know what CRT is. So based on your time frame, this is a weekly CRT. So you have this weekly CRT here. So we are gonna quickly mark it out. You have your CRT low. It's 10 o'clock. You have your CRT low here. You have your CRT high here. Yeah, so we have, that is our weekly CRT. So from the weekly time frame, we go down to the daily. So now on the daily time frame, what do you want to see? So what I want to see on my daily time frame is I want to see price giving me change in the state of delivery. So if you look here, we had price breaking below this low, giving us a daily change in the state of delivery at this area here. So going forward to the 4 hours time frame. Yeah, so based on my 4 hours time frame, as you all can see, what is price doing? We had an entry on this sell yesterday. So we had an entry on this sell yesterday, and today when you look at the market today, I am looking at a continuation of this sell. So what pattern is the market giving us? The market is giving us now low accumulation, lower low, accumulation, lower low. So you see, it's not all the time the market is going to be giving you higher highs, higher lows, higher highs, higher lows. So there are times you're going to be having low accumulation, lower lows, accumulation, lower lows. So like what you can see here. So as you all can see, this is the market giving us this low. And where is this market reacting? If you mark this area well, which is a market structure shift, a 4 hours market structure displacement. Yeah, for those who trade the 4 hours, this is a market structure shift. So I was just gonna put market structure shift here, 4 hours market structure shift, and also reacting like a breaker block. So if you trade breaker block, you're gonna understand what I say. So this is also reacting like a breaker block. Some traders are gonna be waiting for pullback to continue selling, but this market is not gonna give you any pullback because it's already reacting on a valid key level, which is a valid breaker block. So now just going fast forward to the 1 hour time frame. So the 1 hour time frame, you are gonna see that you already have an entry in this market. So I always like taking my trades based on my 1 hour time frame. I don't take trades on 15 minutes. So here, as you can see, here you have market structure shift here. you have this shift here. So now all I want to see is I want to see the market giving me some pullbacks. For more clarifications, we can go to the 30-minute for more clarifications, so yeah, for more clarifications, you can see market structure shift. Your entry needs to be around here, so you can wait for the pullback and you enter. For people who like trading based on the 15 minutes, you see, this is it. The market gave you displacement, model one, push to the downside. So yeah, as you can see, we already have the pullback. So what is happening now? Based on your 15 minute, you can take yourself from this level, stop loss above this high, and you are going in for a 1:3. So um let me just, hold up. Yeah, so you're going in for a 1:3 because from your higher time frame you have already anticipated, it's a long sell. Yeah, the sell is the long sell. So you can take your trade to be like this. You go in for a 1:3 stop loss entry, but I trade based on the 1 hour time frame though. So for me, I still have some certain things I need to see. So based on my 1 hour confirmation, I want to wait to see how this candle is going to close, bearish close, and I'll wait for it on this fair value gap. So that's why I always trade with precaution. So I'm going to be waiting my trade on this fair value gap after this hourly candle close. So my trade is going to be something like this. Stop loss above here, target my 1:3, boom. So this is what I'm expecting on crude oil. So I'm gonna be posting tomorrow how the chart played out, but then let's go to our next chart. No time to waste, we need to be very quick, sharp. So okay, so this is the XY, and on the XY, you know the drill. We go back to our weekly to first start by understanding what has been happening on the market. So as you all can see, we have been on an uptrend recently. Like the previous week was uptrending. As you all can see, the momentum of the candlestick that printed, and like I was even using a very easy setup on this thing, because here we had our CRT here, which was our last week trade. That the so CRT high has been filled in. So coming now to the daily time frame. On the daily time frame, if you look, we even use trend line. Like the trade was so easy, I even had to use a trend line, break and retest, but then yeah, we had our CRT high up here, and what happened? We closed with a closure. So you can see the market is accumulating. We have some accumulation here, and we have what? We have a daily FVG, internal range liquidity, slipping down here. So based on the 4 hour time frame, we are expecting the market to come and take out this internal range liquidity, which is this 4 hour fair value gap slipping down here. So we are expecting price to come and react on the internal range liquidity, and as you all can see, price gave us this displacement, fair value gap, came back, took out the fair value gap on the 4 hours. So we are expecting a sell to the downside, and if you come to your 1 hour time frame, I'm in already on this trade because I took my entry immediately. Price tapped in. Yeah, immediately price tapped in, which also tapped in on this key level. So I took my trade on this level, and my stop loss is just slightly above, and my TP all the way down here on this fair value gap, targeting a 1:3. So this is how my trade looks like on DXY, and same goes with GU. So GU the same thing. Yeah, GU the same thing, as you all can see. Going back to the weekly, so we're gonna be quick on this. We're gonna be quick because it's just the opposite of DXY. So if you understand, if you kind of understand, what is happening on DXY, then you understand what is happening on GU. So GU, as you can see, CRT being filled, close below, we're expecting more down prices, but now price needs to do pullback, take in internal range liquidities. Here, if you look here, we have like a break here. So pull up daily time frame, and on this daily time frame, on this daily time frame, we had here, this is a key level here where the market gave us a structure shift, as you can see. But now on the daily time frame, where are you expecting the market to come? You're expecting the market to come all the way to this key level here. So I'm expecting the market to come all the way to this key level here, because the whole of this area is a breaker block. The whole of this area. So at least you expect price to take at least 50% of that range. So at least 50% of this fair value gap. So you can put here, waiting for price to react on that level. And if you go to the 4 hours time frame, that level is going to have a 4-hour key level, which is also a 4-hour fair value gap. So as you see, we have this big 4-hour fair value gap, and we'll have this break of structure, which also acts as a breaker block. So you have this breaker block here, 4-hour fair value gap, and then this is reacting on the 50% of this fair value gap. So if you even want to look at this fair value gap, you take from high to low, 50%, 61% optimum key level, or as premium and discount level, and on our 1-hour time frame, that's just it. You have your clean entry, clean, like this is it. Price reacting on this fair value gap, tapped in, you take your buys from here, targeting this high, stop loss below that low, and this is how your trade looks like. So I don't really want to explain too much, but that's just a classic CRT trade. And of course, guys, see you on the next video. Peace out.